What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I got 3 high-yield monthly dividend stocks to buy, and I'm just going to tell you, I did enough videos on O and Agree Realty Corporation, a lot of QYLD, XYLD, RYLD. We're not going to do any of those. I've been doing that for a while. They are high yield. There's a lot of them that are great dividend stocks to buy. But I got a wild card stock for you, and it's really interesting with this one. One that's actually on my radar, and I may buy it, may not. Little iffy. It's not Whitestone rate like I was saying before. I still haven't pulled the trigger on it. I'm still really highly considering it. I haven't made any moves, but I got to show you these 3 high yield monthly dividend stocks that are hot right now. They're in demand. I mean, they're less than $60, and these are stocks you got to capitalize on. So let's check this out right now. That first stock is Main Street Capital. I own this stock. I'm long in this stock. I absolutely love this business development company. Remember, with business development companies, just like REITs, 90% of their income goes back to the investors. But this is a really high yield business development company that's a monthly dividend stock. I absolutely love that one. I'm long in it. I probably need to buy more just because it's down. Look at the nosedive during the pandemic. If any of you guys got it at $17.87, you guys are amazing. Kudos to you guys. PE ratio at 10.61. Business development companies, we need to be very careful. So we need to study this stock before decisions are made, if you like this stock or not. Again, I'm not a financial advisor. This is for entertainment purposes, disclaimer in the description. But we got to look into this stock a little bit. You got to be a little careful with business development companies. Some of them are yield traps. We got to make sure this is not a yield trap. But first of all, I like with its increase in price per share over time. It's actually did pretty decent against the S&P. And for the past 5 years. So for a business development company to do that, that's pretty impressive. Let's check out its portfolio. That's the important thing. Okay, so let's look at these guys first. Main Street Capital, based in Houston, Texas, has developed over 200 private companies, grow or transition by providing flexible private equity and debt capital solutions. Privately held businesses turn to us because we are Main Street, not Wall Street. We build relationships and tailor transactions to meet the unique needs of our portfolio companies and their owners. Let's check out their portfolio companies real quick. But let's see why Main Street as well. So they're trying to give us a big pitch, okay? Unlike traditional private equity firms and debt-only funds, our flexible one-stop shop capital solutions allow us to provide all of our third-party equity and debt capital necessary to meet your needs. We then issue a long-term sheet of letter of intent that are no financing contingencies or uncertainties other than completing our diligence and legal documentation. I'm telling you, read real fast and see what you get. So here's some things: flexible and long-term capital, customizable equity and debt mix, not restricted by traditional institutional private equity fund requirements or investments timelines for exit. Certainty to close, all investment approvals maintained by Main Street. So here's what they show. They show the traditional approach: 4 providers, 4 checks, 4 different goals, debt, Main Street solution, 1 partner, 1 check, 1 complete capital solution. So I'm on Main Street Capital. I'm telling you guys, always go to their sites, business development companies, see what they're doing, see why they're doing it. Okay, we need to see who we invest in. That's another important thing. So here's their company revenue. Since the 1990s, they've worked with private equity alternative with other 200 middle market companies. Okay, so here's the revenue. Here's the investment size. Let's look at portfolio companies. So there are companies that they have: Ameritech College, Blackhawk, Datacom, Brewer. So they have their portfolio there. That's great. Okay, I mean that's a pretty huge portfolio. That's way bigger than Gain, and I own Gain. I'm long on Gain, but that's pretty impressive with what they own as a business development company. That is pretty solid. But how much revenue are they generating? We need to see that. Okay, I like this revenue. Look, it's increasing 2014, 2015, 2016, 2017, 2018, 2019, 2020. That's kind of a given. I mean, you can play the COVID card on that. So I like the trends. It's increasing. They're doing something right as a business development company. That's fantastic. That's why many people own this stock, and that's why I own this stock and I'm long in it. But what's really exciting is its dividend history, which I'll show you in a second. Look at this. 16, 17, 18, 19, 20. We're getting near 21 cents. 21 cents. 5.9% dividend yield, PE ratio 10.63, $2.46 annual dividend. My gosh, I'm glad I own a lot of shares in this because I'm going to keep on reinvesting. Eventually, it's going to go back up. Revenue is going to increase. You know, during the pandemic, being a registered nurse, let me tell you, they shafted all of us in healthcare, high ups, and us as nurses working on those COVID units. No pay increase. Employee contributions, you know, like we put in 6, they give us 3. 0, they give us 0% during the pandemic. But guess what? I was getting raises because stocks like this are increasing their dividends. So I'm getting myself a raise. I'm creating these dividend stocks. I do these videos for you guys pretty much to show you I'm creating my own retirement pension. And, you know, people do the FIRE movement. We'll see what happens. I do have a few strategies actually for my active income to go a lot higher in the next year, and I'll reveal that to you guys eventually, but I'm getting myself a raise. It's just going up over time. Nice passive income, reinvesting dividends, annual dividend will go up. I'm buying shares. It's very nice. And if you guys look at my E-Trade and M1 finance video, which if you scroll the previous videos, you'll see how much I've earned with Main Street Capital, how many shares I own. So let's go to the next dividend stock. It's EPR Properties. It's $50.30 right now. And this stock, basically, it's less than $60. It's a 5.96% dividend yield. They just made an announcement that they're back and they're going to distribute a 25-cent dividend to dividend investors. So if you bought the dip during the pandemic at 1805, kudos to you, because my gosh, you're going to be rolling in cash like crazy. You're going to get some nice dividends. But this is a specialized real estate investment trust. You need to know what's in it before you make a decision, just like the business development companies. Before you make the call on investing in a BDC, or before you make a call investing in a real estate investment trust, study it. You got to look into it. Look at the dividend trends. Let's go to their portfolio, because that's the first thing I always tell people. How is it doing against the S&P? Is it decreasing its dividends? Let's check. But let's see what its portfolio is about. Why is this so special? I mean, it's pretty much common sense. Entertainment properties, that's pretty much what the rate is. But let's check it out. So their portfolio, I every time I do videos on this, it's the worst tongue twister. We are focused on growing our experiential portfolio. These properties offer a wide variety of enduring congregant entertainment, recreation, leisure activities. Separately, our education portfolio is a legacy investment that provides additional geographic and operator diversity. So they have 200 plus tenants, 357 locations, 6.4 billion total investments. AMC theaters, they own a lot of AMC theaters as a real estate investment trust. So things are starting to open up. I know people are freaking out about the Delta variant. If you get vaccinated, things will open up a lot more, but you know, people are not getting vaccinated, and I see the stock being stagnant. I don't see it going back to 70. Again, none of this is financial advice, but just studying the trends and people not wanting to get vaccinated and the fear with the market, the fear of the bug. You know, the Delta variant it's a rough virus. I mean, there's enough research out there, but people aren't getting vaccinated, and this is going to hurt this rate for price per share, but its dividend is pretty stagnant. So over time, once things start getting better, it'll be back up to 70. So they have theaters, attractions, ski resorts, lodging, gaming, fitness and wellness and cultural. Look at this with gaming. So, you know, this is commercial gaming facilities total of $43.6 billion. They got one property, 2% of the contractual cash revenue, one operator. So things are This is a well-diversified entertainment. So you see why these rates, this rate specifically, just got boom. When that pandemic hit, it took a huge blow. Ski resorts, lodging, gaming, cultural, fitness and wellness, attractions, eat and play, and theaters. Now, the eat and play is the big one. This is where people congregate. They have 57 properties. Where was the golf one? But they do have golf resorts and stuff. You know, the golfing things where you hit the golf ball. I'm gonna go over that in a second. But you know, this is very exciting. And you know, these are play, and you know, here's let's find where the golf is. Where is it? Top Golf. There you go. So Top Golf is like a big thing with EPR properties. So this is where people drink, have fun, you know, play golf and stuff. You know, this is a these are things that are very attractive. I'm not the best golfer. Being a baseball player, I always slice that way, but that's starting to attract people. People are going to hang out, and you know, this is very exciting. So they have family entertainment centers. So they're starting to, you know, they really did some in-depth. Now, this is what I like about what they showed. Research shows that 70% of consumers prefer to visit entertainment formats versus typical casual dining for group occasions. So they really, like, from upscale bowling and bocce eateries and retro-themed gathering spots designed to appeal socially motivated millennials. So they did their research. They know how to attract this crowd. I'm a millennial. I'm like 35, almost 36, 19 days away from being 36 years old, which is crazy. But this is what they got. Now, they're opening up 25 cents. Eventually, that dividend will probably increase. So that's what's exciting about this portfolio. Things are opening up a little bit. I know people are a little wishy-washy, like I was saying, with the Delta going on. But eventually, once more people get vaccinated, or if people get it, hopefully, let's cross our fingers. Don't quote me on this. This is not medical advice, but hopefully herd immunity will happen. We won't have to worry about this freaking thing out there. Let's jump to the next stock. Next stock is Stag Industrial. This one is done very well. It was in line with the S&P. You got it, the dip, it was at 21.60, but it's slowly increasing its price per share. This is a really good real estate investment trust. It's increasing its price per share. This might not be a bad one for a traditional Roth IRA because, you know, its price per share slowly goes up. It's increasing its dividend over time a little slow. The PE ratio is not bad. And it was founded in 2010. You're going to see this grow. It's going to get bigger, and it's going to get bigger. Now, don't quote me on this. This is not financial advice, but starts getting up there. Split time. There could be eventually in the future time to start splitting. So, you know, its price per share is jumping up. Nobody's going to want to buy it if it starts getting very expensive. So market cap is 6.70 billion. And let's check out its portfolio. Why are these guys doing so well? Again, this is a rate. 90% of the income goes back to us. Same with business development company Main Street Capital. And I got this wildcard stock. It's actually a business development company. I'm looking at it closely. Treading a little bit water, but looking at it closely. Let's check out Stag's portfolio real quick. I like how they're extremely transparent about everything. Stag Industrial is a real estate investment trust focused on the acquisition and operation of single-tenant industrial properties throughout the United States. By targeting this type of property, Stag has developed an investment strategy that helps investors find a powerful balance of income plus growth. 501 buildings, 39 states. Enterprise value, $8.0 billion. So here's some interesting things with these guys. Now, this is what I like about them. They show the properties and their acquisitions. So now we see what they are about. But let's check out their properties. Like I said before, they have distribution warehouses. These are big cities. Manufacturing, distribution warehouse. Salem's kind of close to the Rust Belt, but this is pretty solid over there. This is just my state. These are big warehouses, and they ain't going anywhere. This appears to be a pandemic-proof recession proof. EPR properties is something, if a pandemic or recession, people just don't have the money, they're not going out, they can get hit a little bit. A virus happens, people need warehouses, people need distribution warehouses. I just did my state of Ohio. So that's really interesting. I'm 30 buildings in the state of Ohio. So that's fantastic. No wonder why they're increasing their price per share. And no wonder, I'll show you their dividend, what makes it really interesting. Very slowly, 10 cents, 11, 12, 12.1, well, 0.121. Let's just say that. Dividend yield 3.54%, annual dividend of 145, PE ratio 37.23. But look at this, slowly jump up. It's going to slowly jump up. And it's a 3.54% dividend yield. So that's pretty attractive. That's why I own that one. I actually own Stag. I'm long in EPR properties, and I'm long in Maine. They're different type of BDCs and real estate investment trusts, as well diversified. Now here's the business development company that I've really looked at, and I'm like, should I or should I not? So let's check that out. Okay, so we got a stock that's slowly going up. Horizon Technology Finance Corp. They're a 7.01% dividend yield, PE ratio 29.08. We need to be careful. Is this a yield trap? I mean, it was 9.43 when the pandemic hit. Slowly going up, just a little slow, but it's jumping up. So something's going right with these guys. Let's check out what they're about. Okay, so like its portfolio companies, Horizon Technology Finance is opportunistic and forward-looking. Taking the long view does more than bridge the financial gap. It allows Horizon's portfolio companies to get from where they are to where they want to be. So about us, let's see what they're about. It's a leading venture and lending platform that thoughtfully and creatively provides structured debt products to life science and technology companies. Horizon's experienced team of investment and operations professionals has been providing debt capital to some of the most exciting companies for decades. The members of the Horizon team have collectively and organized and invested more than $5 billion in venture loans to thousands of companies. Since 2004, Horizon has directly originated and invested more than $2 billion in venture loans, more than 250 growing companies. With Horizon's industry knowledge and proven reliability as a capital source, combined with its long-standing relationships in the venture capital community, the Horizon team shares the optimism of its portfolio companies and their commitment to overcome any obstacles to success. Okay, let's look a little bit more. So they're pretty straightforward. Our customers typically are privately held development stage technology companies backed by established venture capital firms in emerging technology, life sciences, healthcare, information and services, and sustainability industries. We also finance publicly traded technology and life science companies. Okay, that's some very big companies. Some of these are Nano Steel, that's a big one. I've heard of that one. Very interesting with their technologies. So we have to be careful. Okay, maybe they do this. Okay. Could it be false advertisement? Are they as real as they say they are? Are they that good? Let's find out financially. This is looking good. 31, 32, 25, 3109, 43, 46. It's going up. Even during a pandemic, it was still going up. So this is why I'm very interested in this business development company. It's very interesting. Its revenue has done well. Okay, it's a high yield dividend stock. How has its dividend done? We need to check that out. Okay, so we need to be a little bit careful. But the thing I like is it's increasing its price per share. Now the dividend has decreased from 11 cents to 10 cents, and it's pretty stagnant in 10. This says 6.89% with a dividend yield, an annual dividend of That's interesting. I'm just really $1.20. So basically got a dollar 10.20. So you're getting 10. 17.13. That's a high yield monthly dividend stock that I like, but its revenue is slowly increasing, which is attractive to me. So I'm gonna make some decisions and think about this stock, but it's definitely on my radar. I really like the increasing revenue. So they're very transparent. I'm very weary with business development companies. Prospect Capital, I'm not a fan of them. I'm not a fan of the M rates, AG&C. You know, this is slowly increasing its price per share, which hopefully the dividend will be increased over time. So let me know what you think of this video. What do you think of this business development company? A lot of people don't realize that this one is not too bad. This one's on my radar for a reason, and I know it hasn't increased its dividend, but over time, but price per share it's going up, and revenue it's going up. So that brings some confidence in me looking at buying this stock. 17.13, that's not bad at all, and I like the dividend increase. A high yield monthly dividend stock, and it's a business development company. So you guys take care. Have a great Sunday. I'm going to try to post a video Wednesday. I might do a YouTube short on Monday and Tuesday. I got my final on Wednesday. It's actually a small quiz, but I'm ready to get this semester over with and relax for about 2 weeks before my fall semester. You guys, again, take care. Have a good one. We are almost at 5,100 subscribers. 5.1, we're almost there. 5.1 subscribers. That is amazing. So 5,100 subscribers. I mean, that is, I'm repeating myself. This is amazing. You guys are awesome on this channel. I'm just going to keep on producing more videos because you guys enjoy them, and it helps me with doing these. I really enjoy doing these videos for you guys. So you guys take care and have a good one.